Did you know that 95% of Americans are essentially giving the IRS a $2,500 interest-free loan every single year? It sounds crazy, right? But it's the truth. Most people are overpaying their taxes because they simply don't know about one specific line on their tax return. We're talking about real money. Money that could be in your savings, paying off your high-interest debt, or funding your next family vacation. Instead, it's sitting in a government vault because you didn't check a box. I'm Peter Griffin, and today I'm pulling back the curtain on the ultimate 2026 tax hack. This isn't some sketchy loophole or a get-rich-quick scheme. This is a legitimate IRS-approved strategy that the big tax prep giants usually bury in fine print. If you give me the next 12 minutes, I will show you exactly how to execute this strategy. By April 15th, you won't just be filing taxes. You'll be collecting a massive check. Let's talk about the tax trap. The IRS automatically takes between 25% and 37% of your paycheck. Think about your work week. If you're at your desk for 40 hours, you're basically working for the government from Monday morning until Thursday at lunchtime. Only then do you start making money for yourself. Imagine you earn $50,000 a year. Between federal, state, and payroll taxes, you're losing $12,000 to $18,000 before you even pay your rent. It feels like you're running on a treadmill that keeps getting faster. But here's what the wealthy know. The tax code isn't just a list of rules. It's a map of incentives. The government actually wants you to save for retirement so they don't have to take care of you later. To encourage this, they created the Saver's Credit. Let's look at Sarah. Sarah is a waitress in Ohio making $28,000 a year. She's hardworking, she's smart, but she feels like she can never get ahead. Last year, she paid $3,200 in federal taxes. When she got her refund of $1,800, she was happy, but she shouldn't have been. She was actually entitled to another $1,000. Why? Because she didn't know that putting a small amount into a Roth IRA would trigger a 50% match from the government. Or look at Mike, a teacher earning $42,000. He thinks he makes too much for these credits. Wrong. Under the new 2026 limits, Mike still qualifies for a 20% credit. If Mike puts $2,000 into his retirement, the IRS hands him $400 back. That's a 20% guaranteed return on his money instantly, regardless of what the stock market does. This is where most people get confused. Listen closely, because this is the core of the strategy. There's a massive difference between a tax deduction and a tax credit. A deduction simply lowers the amount of income the IRS looks at. Listen, you don't need it all at once. You have until April 15th. That's months away. If you save $80 a week, you're there. And even if you only save $500, you still get a $250 credit. That's still a win. Another objection, it's too late for me. As long as the calendar says it's before April 15th, 2026, you can still contribute for the previous tax year. It's like traveling back in time to save money. Third objection, I don't understand the forms. If you use TurboTax, H&R Block, or Free Tax USA, the software will ask you, did you contribute to a retirement account? You just click yes, enter the amount from your Fidelity statement, and the software does the rest. It generates Form 8880, which is the credit for qualified retirement savings contributions. Here is your exact battle plan for the next few months. Today, open that Fidelity account. Don't wait. The longer you wait, the more likely you are to forget. Next 30 days, set up an automatic transfer, even if it's just $50 a paycheck. April 1st, double-check your total contribution. If you can squeeze out an extra $100 to hit a higher credit tier, do it. April 15th, the hard deadline. Your money must be in the account by this date. June, this is the best part. You receive your refund check. You've successfully outsmarted the system. Here is one more thing for my married viewers. This is a game changer. It's called the Spousal IRA. If you work but your spouse stays at home or earns very little, you can contribute to an IRA in their name using your income. This means you can get a $1,000 credit for your account and a $1,000 credit for theirs. That is $2,000 in cold, hard cash back to your household. You spent 12 minutes with me. Most people spend 12 minutes scrolling through meaningless memes. You spent them learning how to reclaim your financial sovereignty. You have two paths now. Path A, you do nothing. You keep paying the maximum amount of tax, and you keep wondering why your bank account never grows. Path B, you take 5 minutes today to set up that account. You commit to saving for yourself instead of the government. You join the 5% of Americans who actually understand how the money game is played. The choice is obvious. Your action items. Click the link to Fidelity in the description. Open your Roth IRA. Come back to this video and comment, Fidelity opening now. I want to see how many of you are taking charge. If this video saved you even $100, smash that like button and subscribe. Next week, we're talking about how to navigate student loan forgiveness and EV tax credits. I'm Peter Griffin. Get your money back, stay smart, and I'll see you in the next one.